Hey, I don't know about you, but lately I've noticed a massive increase in the number of people investing money through the stock market. It's almost as though there's an investing revival going on. Now, on one hand, that's an incredible thing. I'm excited to see people finally taking leaps to invest their money. But on the other hand, unfortunately, a lot of people will also lose their money by investing it through the stock market. And there are many market participants rubbing their hands and waiting for that flood, that great flood of people who are investing money to essentially pass on their wealth ultimately to many companies out there in the marketplace. So today, I'm making this video to really remind you why most people lose their money in the stock market. These things I'm going to share today are there to help you avoid being the majority of people who make silly decisions with their money in the stock market, driven by bad motivations around what they think investing's all about. If you're really enjoying this video as you watch it, I'd love for you to make sure you hit that like button because it really helps to get our videos promoted to much more people so that they too can be helped to make sure that they're making the right investment decisions with their money. I'd love for you also to make sure you please hit the subscribe button and support our channel here at The Humble Penny. And don't forget to share this video with one other person to help them to make better investing decisions. All right, let's dive in now and explore these 5 reasons why most people lose money investing through the stock market and how you can actually avoid doing that for yourself. Okay, so the first reason is that most people let their emotions guide their investing decisions. Yes, so specifically, I'm talking here the emotions of fear and of greed. Now, this is very interesting, and I tell you more recently how I've seen this manifest in my life. I've had 3 groups of people, completely independent, give me a call recently. One of them is an athlete who just called me up saying, you know, aside from playing sport, I'd love to now start to invest my money. I'm hearing so much about investing. I want to go ahead and do it. The second is a musician who got in touch with me and said, hey, I follow other musicians on social media and 85% of my fellow musician friends are talking about investing on their timelines all the time. And the third is my random cousin who I haven't spoken to in ages, who calls me up recently going, hey, should I buy this type of thing or should I buy that type of thing? Everybody is talking about investing, and a lot of them are doing it driven by fear, specifically investing FOMO, the fear of missing out. In addition to that fear of missing out, also have the fear of the unknown. So there are these 2 great fears that exist. There are those who sell out of their investments because they are afraid of what the future holds. They just don't know what the future holds. And there are those who are diving in to try and invest their money today, to invest in anything, forgetting how much work they've put in to actually make the money in the first place. But because everybody else is investing, hey, I must invest also. I must follow on because I don't want to miss out. So fear is one bucket. The second bucket when it comes to thinking about emotions is greed. Now, interestingly, think about it. We barely make any returns living our money in savings accounts. At best, we may get, 0 something percent. You think about it, making 5 to 6% returns would be amazing for a lot of people. But for some people, the greed, some people see that as, small change. They actually want to be hitting 20% per month and beyond. They see astronomical returns as their new normal. And to that point, they take risks. That greed to want to get rich quickly is what then drives their decision making, and they expose their money to just unbelievable risks, and most of the time end up losing the money. And you only hear them share their wins. You only hear them share the rare occasion when something might have gone okay. But the times when they lose money, you never ever hear them talk about it. So that would be reason number 1 why people lose money in the stock markets, because they're driven by fear and by greed. And what you should do instead is not follow the crowd and buy overvalued assets. Instead, focus on creating a sensible investment plan and actually sticking to it. That there is where real wealth is built, by simply creating a simple investment plan sticking with it, and truly seeing your money work for you over time. Okay, so the second reason is that they believe in picking winning fund managers. Yes! Now, I'm talking about this particular one because in the UK, and I'm not going to name any names, in fact, I'd love for you to tell me who I'm talking about in the comments. There's a very, call it famous fund manager who, in more recent times, lost a lot of people their money. Okay? Very shiny, very famous, lots going on. A lot of people poured their money into investing with this particular individual. And, this individual is not the only one. There are many such characters out there. And the reason why a lot of people did that, and a lot of people will continue to do that, is because there's a lot of money poured into marketing star fund managers, individuals with skills beyond the mere man or the mere woman. They've got skills to spot something about them means that they can create a fund that rockets into the skies, when in actual fact a lot of these people are in it to really run their funds, because fund management business is a business. They're in it to really make the money, charge their fees, and when the funds don't perform, guess what happens? They're closed down or they're wound down into another fund. And then you keep hearing that new things have started. In fact, this individual I'm talking about, I read more recently in the media, apologized in a very subtle way, but guess what's coming next? He is starting a brand new fund. And guess what will happen? The media and all these things might be behind this again, and many people will flood in and put their money into such funds. My point here is simple. There's a lot of money to be made in actively managed funds. But guess what? A lot of that money is not made by the investors like you and I. So where possible, avoid star fund managers and their expensive actively managed funds. Number 3 is that they believe in picking individual stocks. Now, I've picked individual stocks myself over the many years. And in fact, it was how I got into investing money myself. But I can tell you, when I look at my investing journey, the only losses that I've seen on my personal investing journey are losses related to investing in specific individual stocks. Now, there are those out there who are unusual for their ability to pick stocks and make them work. For example, Warren Buffett, very famous, makes very good investment decisions, backed by a lot of money. You and I don't have Warren Buffett type money. But yeah, it's easy to find ourselves picking individual stocks because it's the natural thing for a lot of us to do. The thing I want to mention with this video is that if you invest in individual stocks, you have to be ready and prepared to actually lose your money. The problem with picking individual stocks is that it's actually quite addictive. One year you might do well. You might actually pick something that just takes off. And you say to yourself, wow, I've done really well with picking this individual stock, and I can see a trend building here. The problem then becomes you'd struggle most definitely to repeat this same pattern year after year. Essentially, the point here is this. Picking individual stocks is not the best foundation to actually build wealth upon, especially if you're somebody who doesn't really have that much money available to them to lose. Picking 1 or 2 stocks as a way of learning how companies work and as a way of dipping your toes into the investing game could be a good start for you, but making it a core part of your investing strategy is almost a guaranteed way to see your money disappear, because a lot of the news that you read out there is actually manufactured news there specifically to promote specific individual stocks. Think about it. Go and type into Google, type a specific stock. You see reports written. Have you ever asked yourself, who writes this report and why are they writing reports saying to you, buy this particular stock or, hold or potentially sell? They're doing it to create a market for buying and selling individual stocks. So I'm speaking today specifically to those who are beginner investors, those who don't have a lot of money really to lose by investing their money. Where possible, I'd say, do your best to completely avoid individual stocks, because you have very limited information on what the potential future outcome of that company could be, especially as a beginner investor. Where possible, use index funds to really do the heavy lifting for you and help you build wealth over time. Number 4 is that they focus on the noise and not the substance. Now, let me explain what I'm talking about here. When you think about the stock market, there are broadly two groups of things going on. First, you have the underlying companies that we are trying to invest in when we invest through the stock market. These are operational companies with employees and things like that, products and services that we want to invest in and see those companies ultimately become more successful and generate profits over time. But overshadowing this group here is all the noise in the stock market. This noise extends beyond the stock market and extends into the media and extends into things such as trading and extends into everybody and anybody telling you that things are going to go up and go down and so on, and giving you the incentive to buy in and out as many times into the market, such that at some point you hope to make a profit by doing that. I'm speaking specifically here about all the noise around trading, around market participants that essentially get you to sell and buy into investments without actually letting your investments stay in one place in particular assets and let those investments work for you over time. There's so much noise that goes on, and the vast majority of people out there, unfortunately, focus on this fluff, this noise here, rather than really distilling the noise and ignoring the noise, the ups and downs of the marketplace, driven by lots of financial news, financial magazines, lots of things out there intended for only a small group of people to really profit from the marketplace. Did you know that there are companies out there that make money from the stock market, whether the market's going up or down? They make money. They are clearing trades, they're settling trades, they're executing trades. They make money come rain or shine. And why do they make money? They make money because of the activity. And that activity, the noise that the media creates, the drama that the media creates FOMO. And that FOMO forces people to do what? Pick their phones up, click buy or click sell. And what happens? When you get charged that fee, have you ever wondered where that money goes? It goes to the P&L of various companies, various market participants, which is why there's a great incentive for you and I to always do something, to always trade, to get involved in the noise and create the drama, rather than focusing our attention on the underlying operational companies that truly exist to help us create wealth over time. So my point here is simple. Forget trading. Don't trade your money. I'm going to say it again. Stop trading your money. Most people I know who trade, in fact, research shows that around 1% of traders actually make money. Something like that, about 1%. And in my working career in financial services, working with traders, vast majority of them for months make nothing. And these are supposedly professional traders. So if you're a beginner investor or kind of an investor who kind of, would love to grow wealth over time, but is not an expert, what are you doing trading your money? Especially, in addition to that, what are you doing paying to learn to trade your money? What you find is that those that truly benefit from that experience of you getting involved with the fluff, with the noise, are not those who are actually trading. So my recommendation here is simple. Focus on the substance, the operational companies, and how best to have access to those companies as cheaply as possible, rather than all the activity out there that's essentially designed to make you feel like you're missing out and nudge you to ultimately place a trade, to buy or to sell something with the goal of you paying for something and ultimately diminishing your wealth as time passes. The final point is that they believe that they can time the market. It's almost impossible to time the market. And this is a problem that pretty much all of us have. We believe that we ultimately should buy low and sell high. But what you find in reality is that the psychology of investing, the FOMO, and all the noise and all the stuff that goes on means that what most people end up doing is that they instead buy high and sell low. And wealth destruction is essentially what ends up happening. In fact, it goes even deeper than that. When you look at certain funds out there and you look at the performance of those funds, It's easy to look at the historical results and say, yeah, I believe that I'd be able to get that sort of performance if I kept my money within that fund and invested and carried on. But what you find is that the reality of investing money is that a lot of people don't even get the performance that the funds themselves get. Why? Because the FOMO of the world and the pressure to buy and sell forces them to try to time the market, and we find that they try to sell when they shouldn't be selling at all. And the impact of fees, as well as the impact of really exiting their investments, means that ultimately they don't really end up getting the returns that they should be getting from the funds that they've invested their money through. In simple terms, timing the market doesn't work. And if you really want to build wealth sustainably over time, then focus on really just having time in the market and put all your energy into actually making the money that you then put into the marketplace, such that you have more money with more time in the market. I hope you've really enjoyed this video today on 5 reasons why most people lose money in the stock market. As I mentioned earlier, the whole point of this video is to help you make the right investment decisions with your money. Where possible, try to avoid what the masses are saying. Try to avoid that fear of missing out, and instead focus on really creating a simple investment plan that's suited to your needs and suited to your goals, and truly focus on sticking to that investment plan over a much longer term horizon. If you really enjoyed this video, I'd love for you to hit that subscribe button. That helps us support our channel and help us to grow and reach many more people. Don't forget to hit the like button, as well as to hit that share button and share it with one other person who you think might find this video useful. I'd love to hear from you in the comments. Which one of those 5 things that I shared today have you had personal experience of? Which one are you having experience of today? Are you facing the investment FOMO that I talked about earlier in this video? Are you one of those people facing a lot of pressure to invest your money, but without actually knowing exactly what you're doing necessarily? Let me know the realities you're facing today as somebody who's either started investing or somebody who's looking into investing their own money. Thank you so much for watching today's video. And as ever, guys, in all things, be thankful and seek joy. Take care and bye for now.